I'm with Joe LaTour. Good to see you again, Joe.
Hey, Tom.
Okay, I've got a question. I'm sure it's on a lot of people's minds. I know it is on mine. Especially as you near or have moved into retirement, oftentimes your money is invested in the stock market. I do not know what to make out of the stock market. I mean, indicators. Who do you ask? Everybody's got a different kind of take on things.
I mean, you can't really interpret things by looking at the stock market, Tom.
Right.
You know, it was Wayne Gretzky, the great hockey player, that said he doesn't look where the puck is, but the way he played, and the reason he was so great is that he looked where the puck was going. And the stock market, if you keep your eyes on it, you really don't know where it's going. It's just like Wayne with the puck right where it is.
Right.
The leading economic indicators are what predict where the stock market's going.
Okay.
And for the past 12 months, the leading economic indicators have been in decline. Okay.
What does that say? I mean, they've been in decline. That doesn't necessarily mean they're going to remain in decline. Stock market's kind of up and down, cyclical, that sort of thing.
Right. But here's the deal.
All right.
Okay, so these economic indicators start going down 3 to 6 months prior to you seeing the effects in the stock market.
Okay.
So we're coming out of, and you and I have talked about this before, we're coming out of a 13-year bull market. And Tom, there are really only 2 cycles in the market.
Right.
The bulls and the bears, okay?
Yes.
So we are definitely in bear market territory, okay? We have cycled out, and the market is very cyclical. We're no longer in a growth cycle. We are in a cycle of decline. And everybody can see that in their 401ks and in their investments as well.
Okay, but when you hear a word like decline, everybody panics. Or, well, many people panic. We'll put it that way. Is this a time for panic, or is it a time for reconfiguring what you do?
Yeah, no, it's not. So I'm using sports illustrations today.
Go right ahead.
All right, let's talk about football, for instance. Right. Okay, so when the ball is going towards your goalposts, all right, you got your offensive line on the field, right, and you're wanting to move that ball down the field, you're wanting to score, all right? And that I would liken that to a bull market, okay? But when the ball starts going away from your goalposts towards your opponent's goalposts, it's time for you to get your defensive line on the field. Not panic, it's just a time to cycle the offensive line off the field, get your defensive line out there, and go back to the playbook and start implementing defensive strategies.
Okay, what kind of strategies do you like to implement in this case? Because I know that people are out there and they see those numbers going down. They have no idea how to change. We may not have the expertise. What do you advise?
Okay, so people coming in that are prior to 59 and a half, and they say, Joe, what should I do? My 401k, I'm down 15, 17%. The S&P's down 17% right now, Tom. Even bonds are down like 12%, 12 to 13%. This is a perfect storm.
Yeah.
Because normally when the stock market's going down, the bonds are up.
Go up, right.
They're inverse to each other. However, because of inflation and the Fed raising interest rates, even bonds, which are where people usually go for safety.
Right, you normally think of that. Buy bond, you'll be fine. That stock market goes, you're fine.
Absolutely. But when the Fed raises the interest rates,
yeah,
it has an inverse relationship to bonds, and the value of bonds go down. So it's a perfect storm. Both are down right now.
Yeah.
So going into things like with people in their 401ks that can't move it out of there, it's time to get into something stable value. Get into cash. Move it around in there. I don't like the idea of buying and holding, Tom.
Yeah.
Why would you take the ride down? Like back in 08 and 09, the S&P was down 57%. Why would you want to buy and hold and stay in that offensive position and take the ride down all the way down to 57%?
Well, you know, it sounds like what you have to know, though, is when to bring your offense or your defense onto the field.
That's why you need a good coach.
I was going to say, that's what the coach is there for. What do you coach? How do you steer people toward offense or defense?
Well, again, watching the economic indicators, watching things happen, and moving people around in their portfolios out of offensive growth positions into more defensive. You're actually making money by not losing money, okay?
That's very true. If you are hanging on, you're kind of making money in those.
The best money that you'll ever make is the money that you don't lose, Tom, in a bear market.
Yes, and that's what you want. You don't want to lose. You want a good coach on your side? Give Joe LaTour a call.